Today's topic, like you've said, it's everywhere. From 12 years back, this word was an alien to most of us, majority of us, I would say. Cryptocurrency, Bitcoin, virtual digital assets, non-fungible tokens, metaverse, and Ethereum, USD Tether. These blockchain, decentralized finance, smart contracts, these terms were all alien to us, going 12 years back or 10 years back. Today these topics have gained enough importance, tremendous importance, I would say. The reason behind the same is changing dynamics. This boom is because of the fact that technology is supreme. And the only thing which is, the constant is the change. We say change is the only thing which is constant. So changes do come, dynamism do come, technological changes happen, and virtual digital assets, cryptocurrencies, blockchain, and non-fungible tokens, etc., the terms that I've just used a few minutes back, is all a byproduct of these changes. I am a chartered accountant working in international tax advisory vertical at one of the top consulting firms in India by the name of AKM Global. We are a firm established in the year 1981, currently headquartered in Gurgaon. We have branches pan India and even outside India. In Gurgaon office, there are 200 plus employees from diverse backgrounds: accounting, tax, legal, management, secretarial. Most of our clients are multinational corporations, 90% of them, I would say, from more than, I would say, 35 plus countries. We have a strong media presence, including, views of the senior partners of the firm getting published in reputed media newspapers such as Economic Times, Business Standard, Live Mint, etc. We, are ranked consistently by International Tax Review in the World Tax and World Transfer Pricing Guidelines from 2017 till 2022, each year consistently. So International Tax Review is the only ranking system which is recognized worldwide. Coming to the topic, virtual digital assets. Why to tax? Fine. Virtual digital assets have come in. Blockchain technology is there. Decentralized finance is there. We, as a community, we have started trusting these tokens, these new ways of, dealing with each other, transacting with each other. Okay, great. But why to tax? Because there are high stakes involved. India is the, the most, is at the top, is one of the countries which is on the top when it comes to crypto investments, crypto investors. These are all reported in media, all in public domain. The snapshots are in front of you all. Crypto technology industry is expected to grow to $241 million by 2030, as per NASSCOM. It's an insane figure. India worldwide ranks second in terms of crypto adoption. Like, we have adopted crypto massively. We have the highest number of crypto owners. So these all things are happening, which has actually led government to shift from outrightly banning it to somewhere bringing up a regime to tax it. They have also, I think, seen an opportunity by, getting tax revenues from these new age income streams. Like I've just said, 12 years back, these all words were in alien. We could not think that, 10 years down the line, or, back in 2010, in 2022, something like this will be on the rise, and there will be so much of investment in billions of dollars would be there in this space. Let's look at the India's journey before deliberating on the taxation aspects and even the technical aspects. By the way, this all originated in a nutshell by 2008, wherein a white paper by Satoshi Nakamoto. Who is Satoshi Nakamoto? Nobody knows who he is. Nobody knows where he is. Even I do not know. It's a pseudonym name given on a white paper, which has the technical concepts, technical details about the Bitcoin. This paper was published by the name of Bitcoin, a peer-to-peer electronic cash system. 2010, first sale of Bitcoin took place, wherein, can you imagine, someone ate 2 pizzas and gave 10,000 Bitcoins in lieu of that, while just settling off the amount which the person owes after eating 2 pizzas in a restaurant, and, buy 10,000 Bitcoins. Nobody could not even imagine in 2010 that what the person is doing. Is the person doing correct thing while giving 10,000 Bitcoins, or if is the person accepting it a fool, or why, what is the essence of this transaction at large? What is the nature of this transaction? Why is this transaction even happening? Nobody could, most of us could not even, see the rationale behind this transaction. But it's actually true. It's in the public domain. Coming to the Reserve Bank of India and the India stand from 2013 till 2020, I would say. 2020, things changed in terms of cryptocurrency adoption, in terms of these new age digital assets. We were in a cautious phase, or I would say warning phase. A government is having discomfort, and it is still having discomfort when it comes to adopting cryptocurrencies. It is still not a legal tender in India. So RBI was continuously issuing circulars warning, Indians of the potential risks associated while transacting in such virtual currencies. Press releases by RBI. Even, in March 2018, a draft scheme was submitted by the Central Board of Direct Taxes as well to the Finance Ministry for, in consonance with the circular restraining the banking system, banks, NBFCs, and payment providers from dealing in the virtual currencies. In 2018, a very popular crypto exchange, WazirX's CEO, Mr. Nishchal Shetty, started a campaign, #India Wants Crypto. So the idea was to create awareness in Indians for this new age asset class. 2020, Supreme Court strikes down or quashes the RBI circular. What was that RBI circular all about, which after quashing by the Supreme Court changed the game of crypto industry in India? So the RBI circular, to summarize, was about that it restricted the banking facilities to the persons who want to facilitate transactions in cryptocurrencies. That no bank should support these transactions. In simple words, the circular was about this. Supreme Court just quashed the circular on the constitutional grounds that it is the fundamental right of anyone to do business, to do the business the way she wants, or do business the cryptocurrency exchanges wants. So the circular was quashed. 2021, Indian government continued with its discomforting stand on these virtual currencies, virtual digital assets, and they came up with a draft bill proposing a blanket ban on the cryptocurrencies in India, while they wanted to bring up a new currency, sovereign backed currency by Indian government, and subsequently putting up blanket ban. This bill has not been tabled in the parliament so far. No needle has moved so far on this bill. And it's all a draft bill right now. 2022, Honorable Finance Minister Nirmala Sitharamanji, while giving the budget speech, announced the direct tax regime for virtual digital assets. Let me tell you, the virtual digital assets is defined in 2 Clause 47A of Indian Income Tax Act 1961 through Finance Act 2022. But this definition has been largely taken from the draft bill which came in 2019 to ban the cryptocurrencies. Not entirely, largely taken from that draft bill. Let's come at what is a VDA. What is a virtual digital asset? Let's read this definition. It's very important for the deliberation going forward. It means is an exhaustive definition. It does not mention includes. It mentions means. Any information or code or number or token. So 4 components. Any information or code or number or token generated through cryptographic means. Fine, a technology which is there to generate cryptocurrencies, or otherwise. The word otherwise is even if any information, code or number or token generated through non-cryptographic means is also a VDA. If I go by this definition, the plain vanilla meaning of this definition, by whatever name called, providing a digital representation of value. This is an important feature. Digital representation of value exchanged with or without consideration, with the promise or representation of having inherent value. Can someone say, people say Satoshi Nakamoto invented Bitcoin. Nobody knows who he is. Nobody knows where he is, where does he live, and who is he basically. But still people just, say that he invented Bitcoin. No, we cannot say that because it's just a name, pseudonym name given to the white paper on Bitcoin in 2009. Can new age assets like cryptocurrencies, non-fungible tokens, have inherent value? It's a very interesting question. I'll come to that later in the later part of our slides. Inherent value. And we have to appreciate the wording of the definition with the promise or representation of having inherent value or functions as a store of value or a unit of account, including its use in any financial transaction or investment. You use it in any financial transaction or you do an investment, but not limited to investment scheme. I'll tell you why they have mentioned this, but not limited to investment scheme in the later part of our slides. But this definition is quite beautiful, I would say. Very beautifully worded. They have made this definition all encompassing, I would say, and can be transferred, stored, or traded electronically. Whatever act you do of concerning any information or code or number or token which is generated through any means by whatever name called, forget about cryptographic means. It says through cryptographic means or otherwise, by whatever name called. It's a VDA. Coming to part B, a non-fungible token or any other token of similar nature by whatever name called. The interesting part is that what was the need to actually insert part B to 247A in the form of a separately mentioning non-fungible token there, when they already mentioned any information or code or a number or token generated through cryptographic means or otherwise? The intent behind this seems to be that they want to treat non-fungible tokens as a separate asset class. Non-fungible tokens, the way they have picked up their pace, is phenomenal, is like unimaginable. Coming to see any other digital asset, as the central government may, by notification, specify. They are not sparing. They know it's an ever-changing dynamic technology called as blockchain. It's not just cryptocurrency they want to tax. It's not just non-fungible token or Ether or Ripple or USD Tether. Any new age asset class which may get spared through clause A can get covered in clause C, provided that the central government may exclude any digital asset as well. That's fine. They may exclude any digital asset. This exclusion or this proviso has come in because of, I would say, central bank digital currency has been announced by Honorable Finance Minister Nirmala Sitharamanji during the budget speech as well, wherein India will release its own CBDC, central bank digital currency, on the basis of the blockchain technology. So this proviso will help the government in excluding that CBDC from VDA. Maybe this is my view. One is free to take the view. Non-fungible tokens, as per the explanation to this section 247A, 2 clause 47A, central government has in the explanation clearly mentioned that we will define non-fungible tokens. Do not worry, we will do that work for you. Do not consider that non-fungible tokens is a VDA. We'll define it for you. But this definition has not yet come. This notification has not yet come. Non-fungible tokens are basically unique files that live on the blockchain technology. Even the entire system of cryptocurrency, Ether, non-fungible tokens, they live and thrive on blockchain technology. No blockchain, no cryptocurrency, no non-fungible tokens. Though non-fungible tokens are, in a simple language, programming codes, which is a popular programming language to create an NFT, is Solidity. One of the popular programming languages to create an NFT is Solidity. So a notification for non-fungible tokens has to come by central government. They have inserted an explanation to this definition. So the intent is to treat NFTs separately because they are all booming like anything. Another explanation is on currency. Obviously, they'll have to be very clear with the wordings of the section that Indian currency is not a VDA. Indian currency is a sovereign-backed currency, is not a virtual digital asset. Or any foreign currency in as per section 2 of Foreign Exchange Management Act 999 is also not a VDA. This may create a controversy. We all know that one of the countries recently, or it has been some months now, that has announced Bitcoin as a legal tender, El Salvador. It's a country. So if foreign currency and an Indian currency is out of VDA, prima facie, after referring to the explanation to section 2 clause 47A, can we say the legal tender in the El Salvador is Bitcoin can that state, just by giving a status of a legal tender by El Salvador, will help Bitcoin enter into a category of foreign currency for the purposes of foreign exchange regulations in India? It's an interesting point, but I think no, because it's ultimately a code or a token formed through cryptographic means. Let's, I have tried to decode the definition for you all. Like this definition, like I've just told you, it is taken largely from the draft banning of cryptocurrency and regulation of official digital currency bill 2019, which came way back before Union Budget 2022. In that bill, I tell you that it was written cryptocurrency means any information or code. Virtual digital asset word was nowhere there in that draft bill. So they have widened the definition, made it all encompassing the way I have just mentioned. So important criteria: any information, code or token generated through cryptographic means or otherwise. This otherwise is very interesting. This reflects that even a cryptocurrency or even a token formed through non-cryptographic means form VDA can get covered under VDA. Can be transferred, stored or traded electronically, fine, providing a digital representation with the promise or representation of having inherent value. So interestingly, before coming to point number 5, I would say point 1, 2 and 3, they are mandatorily required to be seen before characterizing any new age asset like cryptocurrency or NFT as a VDA. Point number 4 and 5, they are optional. Even, any one of those conditions may get fulfilled and you may characterize that as a characterize that asset as a VDA. But 1, 2 and 3 should be read together as mandatory criteria or mandatory checklists to qualify an asset as a VDA. 4 and 5 can read as options to each other. If not 4, check 5. If not 5, check 4. And it cannot happen that 4 on 5 both will not apply. It will not happen, I'm telling you. Either of them will definitely apply. Is Indian currency or a foreign currency a VDA? Already mentioned, Indian currency is not a VDA. They are our notes, simple rupee notes issued by the Reserve Bank of India, signed by the Honorable Governor of the Reserve Bank of India. If a foreign currency a VDA, what does the foreign currency mean? Foreign currency, as per the foreign exchange regulations of India, means any currency other than Indian currency, like United States dollars, like pound sterling, like Guinea peso, like Japanese yen. Okay, all sovereign backed. Interesting point. We all watch Netflix. We all watch Prime, Hotstar. We all, listen to audiobooks. We all attend webinars. We pay for the subscriptions. We have, we do online shopping. Can subscriptions to these OTT platforms, mobile applications, e-commerce platforms be covered under VDAs? Why I'm telling you, don't just go by what I've written. They cannot be covered under virtual digital assets. Why? These are all, formed through programmed codes. Whatever transaction you're doing on Amazon or whatever transaction you're doing on Netflix of taking a subscription, it's all programmed. It's all a programming language behind the same. Why can't we say that this subscription transaction or a Netflix transaction is a VDA? We cannot say that because they're not, I would say they cannot be characterized as assets. Can you say I have a Netflix subscription, it is my asset? No, you cannot, right? Coming to a very important point here of an inherent value. I told you that can VDAs have inherent value? When they say that cryptocurrencies are not backed, no government has announced it as their legal tender. Even Indian government, forget about everyone, even Indian government, our government is having discomfort. This much of discomfort that they have levied a highest tax rate of 30% on it. So if there is a degree of discomfort, there is a degree of, if there are trust issues with the technology, if it is completely decentralized, we place so much of trust on our banking system. I know that my money is there in the ICICI bank or an HDFC bank or an XYZ, ABC bank for that matter, any nationalized bank. My money is safe. This much of surety, this much of trust is in the minds of Indians. And we Indians place trust as our utmost priority. We function on trust. If we trust it, we go about it. And if we do not trust it, we always have second thoughts about it, be it anything. So coming to inherent value, why I'm placing so much of thrust on this aspect is if I go back on the definition of 2 clause 47A of virtual digital asset, it says with the promise or representation of having inherent value. If my cryptocurrency or if my Ether or if my NFT is representing inherent value, it's a VDA. How it's a VDA? If it is not backed, if it is not recognized as legal, if there is so much confusion, so much of ambiguity around the world, why? I'll tell you why. There is an interesting term of initial coin offerings, ICOs, similar to IPOs for companies. In the crypto world, it's an ICO. It's from the company point of view, it's an IPO. Initial coin offerings, like, you remember Mr. Satoshi Nakamoto, a white paper was released back in 2009. What was that? It was a proof that crypto or a Bitcoin may have an inherent value. That is why this inherent value word is very important in this definition, that whenever you apply for initial coin offerings, you have to come out with a white paper. What is white paper? White paper is a paper which consists of all the technical details, all the underlying concepts of the assets, everything about the project. By project, I mean a blockchain project. These tokens are nothing but there are several projects on blockchain which are running. Ethereum is running on Ethereum blockchain. Bitcoin is running on Bitcoin blockchain. So they have to come out with a white paper. In US, there is Securities Exchange Commission, popularly known as SEC, or other agency. They have to submit this white paper having concept, technical details, everything about the project, blockchain project underlying that virtual digital asset. These all points lead to the fact that virtual digital assets may have an inherent value associated with it. That's why this inherent value word is mentioned in this definition. Because prima facie, it seems that if nobody is recognizing it as even legal, how can someone say that it has some inherent value to it? So this is the reason that why inherent value word is mentioned, so that there should not be any loophole that, you know, an asset should go out of the VDA. Coming to non-fungible tokens, I'm telling you, non-fungible tokens is the next chapter in the history of art. What happens, what used to happen earlier, it was a quite popular practice. Super rich used to buy wall paintings, antique wall paintings. M.F. Hussain horses, a popular painting which every Indian must have heard of in his lifetime at least once. Horses of Hussain Sab. So super rich used to buy these things. Now, like I've said, technology is changing. Everything is digital. Even you can buy a virtual land. Even, you know, H&M store has completely, come up with their virtual store where you can sit in your cabin and travel the entire, or, you know, hang around the entire H&M store. Technology is fast changing. Even, you know, that fast, which is much faster than even the word fast, I would say. Non-fungible tokens, they have picked up a phenomenal speed after a sale of Beeple. What Beeple is one of the popular, it was one of the popular news all over when this Beeple was sold. This is Beeple, a collection of photos, collection of artwork combined into one, programmed into a coding language, using languages like Solidity, etc., and marketing it, making you a owner of it, of a unique painting or a unique artwork like Beeple. It was sold for $69 million by a digital artist, Mike Winkelmann. This was the turning point of non-fungible tokens. We have been doing practically lots of advisories, tax advisories, I would say, on non-fungible tokens and for cryptocurrency exchanges, for the popular cryptocurrency exchanges. I can tell you one thing. There is a lot to come. This space is actually booming a lot, both from the technical sides and the taxation aspect, and even the legal regulation aspect of it. Interestingly, only the taxation regime has been announced so far. You cannot say that they're legal. Nothing has been clarified or nothing has come up from the government's end to say that it's a regulated space. It's not as of now. Only a tax regime has been announced. Types of virtual digital assets. Virtual digital asset definition itself has been worded in such a wide manner with provisos and explanations to it that central government will also notify the asset which may be excluded, or the central government will by notification come up with the definition of a non-fungible token. It is itself an information or a code or token. Digital representation even of inherent value has been covered. Stored, traded electronically, everything has been mentioned. Whatever best possible this definition can be worded, this definition has been worded in this very wide and all-encompassing manner. So what are the types of VDAs? Cryptos, Ether, USD Tether, or NFTs, are they the types of VDAs? No, these are not the types of VDAs. There is no standard classification. One cannot say that this is the classification A, B, C, and D. These are the type A VDAs, type B, type C, type D. No, you cannot say that because it's not possible. It's a fast changing technological environment, fast changing. By the time we are speaking, by the time we are attending this webinar, I can say an N number of blockchain projects must have been rolled out on a blockchain already. Nobody knows. But still, one may classify it on the basis of the functions performed by them. Just like payment tokens, just, their name suggests, they are used as a medium of exchange of goods or services. Property tokens, interesting. If you have a right in some property, you can convert that right into a property token, and then you're an owner of that property token. Interesting, right? So it's all, you can tokenize a blockchain project which is there on the blockchain. Simple. Take an example of your phone. This is your smartphone. Everybody is having it right now. How many apps are there? Assuming that you have not taken the advertisement of Mr. Amitabh Bachchan quite seriously, that you just have to keep Just Dial app on your phone and not any app. Okay. There is an advertisement that comes on the television that why is the need for so many apps? He removes all the apps like this. This app should also go out. This app should also go out. Only Just Dial or, one app should be there. So assuming you have not taken that advertisement seriously and you have numerous apps on your phone, what are they? You have apps on Android. You have several apps on iOS. What is it? One app is doing something else. One app is doing something else. One app is taking track of your fitness regime. One app is about your audio books which you want to read. One app is about music. One app is on gaming. Everything is doing different function. Every app is doing different function. Just similarly, it's a blockchain technology. Several blocks are there. Several projects are running. They are doing different functions. They are designed to do payments. They are designed to represent property rights in the immovable or movable property. So they are payment tokens or they are property tokens. Similarly, they are utility tokens. Similarly, security tokens. Interestingly, India so far in its securities law does not recognize virtual digital assets as securities so far. Like I've just said, similar to your phone, on your Android operating system, there are several apps running. On a blockchain technology, there are several projects running. And you can have, once you tokenize those projects, you become an owner of those projects by investing or by transacting, putting in your money there, and then you get a token. Depending on their function, you name it. So this list can be as much as long as there is no fixed type which can be given to VDAs due to their ever-evolving nature. Coming to the direct tax implications. Let's understand direct tax implications in two phases: pre-Union Budget 2022 and post-Union Budget 2022. Pre-Union Budget 2022, lots of clients from all over India approached us for, whether to classify as capital gains or should whether to classify that income as a business income, or if I have my HUF, I am doing some payments there and there and there. I'm transacting through my HUF, not in my personal capacity. Where should I disclose and whatnot? After Union Budget, the air seems to somewhat clear around the taxation regime, at least. Not entirely, I would say. Most of you must be thinking, not entirely. We still, there's still a lot of ambiguities. I agree. There's still a lot of ambiguities there. So, post Union Budget 2022, a special tax rate, a highest tax rate has been imposed. Finished. Before Union Budget 2022, there is no clear-cut guideline, or there is no clear-cut, I would say, an instruction from the Central Board of Direct Taxes that should you consider your cryptocurrency holdings or holdings in other VDAs or NFTs as this type of an asset or this type of an asset, that type of an asset. It's not a clear-cut guideline. There is a very old circular somewhere, released in 1980s on speculative business income, somewhere in 1980s or 1990s. I'm sorry, I'm actually missing the correct year. It's going out of my mind right now, the correct year. But it's a very age-old, decade-old circular which came in 90s or 80s somewhere, about speculation, or about it clarified that if you're transacting regularly, then it should be your business income. And if you're transacting, let's say, for an investment purposes, once in a while, and your trading patterns are not fixed, it's not regular, it's not frequent, you may consider those as investments and consequently pay tax as capital gains if you sell them. Similar analogy was drawn to the scenario pre-Union Budget 2022, that if you're holding cryptocurrency or NFTs as your investments, then any gains arising from such investments should be your capital gains. And if your transaction, if you are a trader, or you are, doing trading, just like you do it with shares, and you are quite substantially doing it, frequently doing it, almost on a daily basis, or almost 4-5 days a week, it should be held that the taxpayer is trading, making a business out of it. You're doing business with it, irrespective of the fact that you do it in an individual capacity, or you do it through your HUF, you do it through a partnership firm, does not matter. The nature of the transaction is frequency and intent. If my intent is to hold something for investment purposes, it's a capital asset. If my intent is to make gain out of it, sell it, trade in it, it's a business income. So before Union Budget 2022 proposals, or now not the proposal, Finance Act 2022 is there, this position was considered as prudent. After Union Budget 2022, still there is no clarity. Only the tax rate, the withholding tax provisions, the gifting tax provisions, and the definition, relevant definitions has come in. Not complete definitions. Like you've just seen, provisos and explanations are there. No complete definitions have come in, but still somewhat clarity has come in with respect to these tax rates and the withholding tax provisions and gift tax provisions and the definition aspect. Still, they haven't clarified that whether it will be a currency, commodity, or a security. Security, like I've told you, Indian securities laws do not recognize cryptos as securities so far. It's not a currency, like I've just mentioned. It's not a legal tender. So, as a special tax rate, which I will cover in the next slide, has already come in, it should be classified as separate asset class. Again, similarly, what about the period of holding? If if I treat it as capital asset before Union Budget 2022, for example, this FY 21-22, the financial year which just got ended, on 31st of March 2022. Period of holding should be considered as 36 months. You cannot consider it as 24 months or 12 months. Prudent view is to consider it as 36 months. Less than 36 months, it's a short-term capital asset. More than 36 months, it's a long-term capital asset. Coming to post-Union Budget 2022, Section 115 BBH. Special tax rate of 30%, highest tax rate of 30%. And let me tell you, this is not a flat tax rate. This is excluding the surcharge and cess. So the effective tax rate, if you are an individual, let's suppose, and your total income is more than INR 5 crores, surcharge of 37% gets subtracted to you, the effective tax rate will go to somewhere to 42.7%. So this much damage has been done by the highest tax rate of 30% on the income arising from the transfer of these virtual digital assets. No deduction apart from the cost of acquisition should be allowed. This is quite clear that whatever the underlying policy or the intent here to tax such new age asset is that we Indians are, or at least from the government point of view, are yet to trust on these new technologies. We haven't trusted, or at least the policymakers seem to not having trusted fully in these new age technologies. And maybe this is the reason that CBDC was announced as well, central bank digital currency. 30% tax rate sounds similar, winnings from lotteries somewhere getting linked, right? Games, shows, these words must be coming in your mind after hearing 30%. So is this regime similar to taxation of winnings from games, lotteries? Somewhat, you can say, partially, it is similar. No deduction is allowed apart from the cost of acquisition. Interestingly, cost of acquisition is still an ambiguous area. The only clarification that have come in is that the infrastructure setup costs and electricity costs will not be considered as deductible for the purposes of cost of acquisition for the people who do mining business. And let me tell you practically, in India, there are it's a very minute number, very petty number who is into mining. In India specifically. Very minute number, or even not that as well, but very negligible amount of number of people who are into actual mining of cryptos or NFTs. Either people are transacting in it or investing in it. Very negligible, very petty amount of the number of people who is into mining. So if you are into mining, what is your cost? Electricity cost. There is a huge amount of electricity cost which goes into mining. Mining is not at all an easy task. Lot of electricity goes into it. Electricity costs, infrastructure costs, setup costs, they are not allowed to be deducted. Straight away tax at 30%. What is allowed to be deducted? If these for mining business are not allowed to be deducted, then let's come to people who are investing in it. You sell it, you must be incurring some brokerage if you sell it. Is it allowed to be deducted? No clarity, no guideline and no clarity on this as well. Like I've just mentioned, tax rate of 30%, and for super rich the effective tax rate goes up to 43%, 42.74% to be precise, round up to 43%, is damaging in itself, with no deduction in respect of any expenditure. I'll cover brokerage here, other than the cost of acquisition or allowance or set off allowed to the assessee in computing the income referred to in 115 BBH. So 115 BBH will not allow you to take any deduction in respect of any expenditure. Please be mindful of this phrase, any expenditure, other than the cost of acquisition or allowance or set off. It's not allowed. No interhead and intrahead set off allowed as well. There was an ambiguity which is put to rest recently, that fine, the section was worded in such a way that this income arising from transfer of VDA or in case of any loss will not be allowed to be set off under any provision in this act, under any provision in the Income Tax Act. They have completely said no for interhead set off under any provision. You cannot set off this loss under any provision of this act. Fine. There was a view that intrahead set off may be allowed because that's not technically set off. That controversy has also, or that ambiguity has also been addressed, that no, intrahead will also not be allowed to be set off. No carry forward of losses as well. So basically, section 115 BBH is quite a big section in terms of its applicability. No deduction other than the cost of acquisition, which is yet to be clarified. Only clarification so far on cost of acquisition is for the mining business. No carry forward, no set off under any provision, no intrahead, no interhead set off, no carry forward of loss allowed. 30% is not flat, 30% plus applicable surcharge and cess. Let's come to an illustration. Let's suppose a Mr. A, who is an Indian resident, purchased 50,000 USD Tether, which is one of the cryptocurrencies, at rupees 67 on 16th of July 2019. He transferred 20,000 of USD Tether on 1st of March 2022, which falls in which previous year? Previous year 21-22. Previous year 21-22 is before the Union Budget 2022. And the remaining in 22 and 23, which will fall after the Union Budget in 2022, after this FY 22-23, in 2023. So the tax treatment and the tax implications are going to be completely different. How? Let's see on the table in front of you. First is a pre-budget scenario. 20,000 of USDT has been sold for 18 lakh INR. The currency here is INR. Brokerage is 2,000. Net profit or loss stands at 3,28,173. How? You will give an indexation benefit as well if you have held it for more than 36 months. LTCG, long-term capital assets, indexation benefit you'll get for FY 21-22 because 115 BBH applies to previous year starting 1/4/2022 onwards, and this sale or this transaction pertains to the date 1st March 2022. So after an indexation, net profit or loss comes to 328. Tax rate at 20%, long-term capital gain 98,450. Coming to the asterisk star, like I've told you, benefit of indexation you can give as 115 BBH is applicable from PY 22-23, AY 23-24. Sales consideration, less cost of acquisition is taxable, no doubt on that, because we have been given that no other deduction allowed of any expenditure other than cost of acquisition. Brokerage is any other expenditure, in my view. Brokerage is not your, or you cannot, brokerage is anyways not your cost of acquisition. Brokerage is a transfer expense. You have incurred brokerage at the time of transferring your USD Tether, not at the time of buying it. No set off and carry forward allowed. Coming to the transactions which happened on 1st 4 2022 and 31st of March 23, both in the financial year 22-23. There is a reason that I have taken both these transactions in the same year to explain the set off and carry forward hit as well, which Mr. A in this illustration will experience. 20,000 USD has been sold on 1/4/2022, wherein 115 BBH at 30% is in force. Brokerage is 2,500, 10 lakh is the sale price. It has been sold at a loss of minus 3,42,000 something, 42,000, 3,42,500. What is the tax? Nil. It's a loss situation. Can you carry forward this loss? Or you have sold another lot of 10,000 USD Tether on 31st of March 2023 for around 15 lakhs. You have got a net profit, straight net profit of 8,27,000. Can you set off this 8,27,000 from, can you set off the loss of 3,42,000 from 827,000 gain? Clearly, no. Now, clearly, no. 1 month back, there was an ambiguity. But recently, a clarification has come in that intra-head is also not allowed. Inter-head was anyways not allowed. Intra-head is not allowed as well. Coming to the next illustration on non-fungible token. Mr. A has purchased 3,000 NFTs of, let's say, there is a very popular NFT edition, Ape, 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 monkey. You can Google it. It's a very popular NFT, edition. Bored ape, happy ape. Each ape is unique. Each ape is different from each other. So he has bought 3,000 NFTs of Bored Ape edition at 1,000 each on 16th of July 2020. Which financial year he has purchased? FY 2021. No 115 BBH, nothing is there at this point of time when he purchased this. Now, in PY 22-23, when a specific tax regime has come in, he is selling those NFTs 1,500 in the lot of 1,500. Obviously, it's his choice. He has sold 1,500 NFT tokens on 1st of April and the remaining on 31st of March. One at a consideration of 3 lakhs, another at a consideration of 17 lakhs. Clearly at a profit and a loss situation. But see, due to the restriction on setting of intra-head loss, they cannot even set off the loss from minus 12 lakhs and 2 lakhs. So the taxable profit would be 2 lakhs over here and the tax rate would be 30%. No deduction for the brokerage. Like I've told you, it's an expense on the transfer. It is not the cost of acquisition of those NFTs. Another interesting part, gifting. We Indians, or not just Indians, anybody likes gifts a lot. Everyone on this planet likes gifts. And even if it is a surprise gift, then nothing better than that. We all know, as per Indian Income Tax Act, or as per the Indian tax regime, nobody gifts nobody. This is a popular statement from the tax perspective, not from the general perspective. Even I receive gifts in a, when someone voluntarily wants to give me something, it is known as a gift. When I want to voluntarily give someone a token of appreciation, that can be in the form of a gift. But in the tax language, nobody gifts nobody. So that's why there is a tax on it. It is not a gift tax. Gift tax has already been abolished. Don't go by this word that the gift tax is coming again. What is this gentleman by the name of Yeeshu Sehgal saying? I'm not saying it's a gift tax. Gift tax has been abolished and it has not come back. So a sigh of relief here. Gift tax is not here again. But there is a section 56(2)(10) which applies whenever any person, I mean any person, irrespective of the residential status, resident or a non-resident, any person for that matter, receives any benefit whose value exceeds rupees INR 50,000. So there is a possibility that after getting a 30% tax rate, people may have started gifting VDAs to each other. That's a separate matter, that if you gift it to a relative, it is still not taxable, because 56(2)(10) gives immunity to the gifts which is received from a relative under a will or an inheritance, or from a trust registered under the Income Tax Act. 56(2)(10) still gives you immunity. But there are a lot of transactions in the crypto ecosystem, or the VDA ecosystem, I would say, which is without consideration. How? Tell me, how can someone give you a VDA without consideration for free? Airdrop tokens, a buzzword in the crypto world. Airdrop tokens are nothing but the tokens which has been airdropped the moment you have logged in to the virtual digital asset portal, the virtual digital asset ecosystem. You'll say, okay, fine, but I did not ask for this gift, but still I've received this. Why to pay tax? Why to pay tax? Why? I do not have to pay. I didn't ask for this gift at all. I just logged in. There were some promotions going on. There was an incentive going on by the cryptocurrency exchanges. There was a promotional scheme going on the online portal. I was just, I just got the benefit. That's it. Just, I was a part of the ecosystem. That's why I got the benefit. Yes, you have answered it yourself. You were a part of that ecosystem. That's why you have got these tokens which were airdropped on you. So airdrop is basically, just to reward you as a community member, because these are all, remember in 2018, I told you, Mr. Nishchal Shetty started a campaign of hashtag India wants crypto to create awareness. Daily a tweet used to happen in this hashtag to create awareness in Indians on the cryptocurrency, hashtag India wants crypto. So this was straight away a community building up exercise, which trusts each other. Like, I am a part of a crypto community, for example. If my friend is a part of a crypto community, you are a part of that community, somebody else is a part of the community, we are community members. We trust this thing. We trust this new age asset class. That's why we are a part of the same community. So we get rewards as part of these community members So as in a bid, as to, encourage our early adoption, or to, place trust on this new age asset class, we get some tokens as a promotional tokens, incentive tokens, popularly known as airdrop tokens. Let me tell you, if the fair market value of these airdrop tokens exceeds INR 50,000, it is taxable in your hands. It is taxable in the hands of the recipient. You cannot be done away just by saying that I did not ask for it, they just gave me. No, you are a part of the community. You place trust in that community. You have trust in that idea on the project. That's why you have been given a reward and you happily accepted it. Why not? Everyone would do that. Similarly, if an individual or any person, be it a partnership firm, LLP, HUF, AOP, BOI, donor or donee, any status you have, if you have received such VDAs as gifts and the fair market value of such VDAs exceeds INR 50,000, it is taxable, clearly taxable in your hands. Coming to the next thing which was there in the budget. So to summarize so far, simple 4 things came so far. One is a definition of a virtual digital asset has been given. Second is tax rate at 30% plus applicable surcharge and cess has been given, with no deductions other than the cost of acquisition, with no set off carry forward allowed. Fourth is the gifting tax provisions has come in the hands of recipient to cover airdrop tokens and all. Fourth one is the withholding tax provision. Section 194S is the relevant section for the same. So let me first tell you, if anyone of you is having questions so far, let's take it up at the end of the session, because maybe some of the questions would be answered as I progress along the slides. Withholding TDS or TDS provisions. TDS is withholding only. We use the word withholding for the non-residents. I work in international tax advisory, so we cannot use the word TDS. If we use the word TDS, the non-resident person won't understand it, because TDS is an Indian word. It's a tax deduction at source under the Indian income tax laws. But to convey our message that this remittance is subject to withholding, this remittance is subject to TDS at this and so rate, we use the word withholding. So in international tax and the cross-border transactions, term withholding is used popularly instead of TDS. Just a second. So a simple 1% rate has come in section 194S. Who is to deduct TDS and for whom? A big question here, right? We all know a person who pays, or a person who is responsible to pay a consideration, pay an amount, has to deduct TDS if such payment falls under the relevant sections of the Indian Income Tax Act. Here, section 194S, let me tell you, it only applies to residents. It does not apply to non-residents. So any person who is responsible for paying consideration to a resident has to deduct TDS at the rate of 1% flat. No surcharge and no cess here. If the deductee has not given his PAN, a popular funda of 20.8% would apply. 20% plus 4% says to be on a safer side applies. Otherwise, 20% as per 206AA, section 206AA. There is an ambiguity on the obligation, that who is obligated to pay this tax. Fine, you have mentioned that any person responsible for paying consideration to a resident shall deduct TDS at the rate of 1%. Fine, got it. Coming to the practical scenario, which we see in our day-to-day tax advisories, which we see in our several, client calls. The day these tax proposals were announced, I was on for calls for almost 2 to 2.5 hours daily with the clients who are actually either have invested in cryptocurrencies or NFTs, or who are an exchange or what. First of all, these TDS provisions require a lot of clarity to be given to them, because in practical scenario, if I am, let's say, dealing on a cryptocurrency exchange, buying a crypto, selling a crypto, who should I deduct TDS for? And I think, whom should I for whom should I deduct TDS? Who is the buyer? Who is the seller? I am the buyer, but I do not know who the seller is. There's a practical difficulty here. Buyers and sellers do not know each other. As of now, considering the plain vanilla wordings of the section 194S, the obligation is on the buyer. Or it can be on the cryptocurrency exchanges also. Because there is a limitation that the buyer and the seller do not know each other. And let me tell you, even if the obligation is cast on the cryptocurrency exchange, it is going to be practically challenging for an exchange as well, because there are huge transactions which happen on the exchange almost on a daily basis. People do arbitrage there, people do trading there, people do buy and selling there, P2P lending happens over there and whatnot. But what is the impact of this 1%? Why this 1% has come in? 30% tax rate, okay, fine, you wanted to tax, it is booming, cryptocurrency, India has the highest number of crypto owners, one of the top countries in terms of the adoption of cryptos. NFT is already on the rise, and every Bollywood actor is releasing his or her own NFT. Fine, 30% tax rate, no deductions, similar to the taxation of winnings from games, which is there. 1% is to trace the transaction. Let me tell you, if we take a global outlook, I am trying to link section 194S, which is a domestic tax law provision applicable only in case of payments to residents. These kinds of payments are basically linked to somewhere money laundering or finance terrorism. Coming to the later slides, when I'll cover the global developments, combating finance terrorism, CFT, anti-money laundering, these all agencies do recognize and do know that these kind of transactions, these kind of things can be used either ways. A technology can be used either ways, I would say. So 1% provision is to actually have a proper trail of the transaction, trace the transaction from where it has been originated and from where it has finished to actually develop a trail here. Obligation is primarily on the buyer or on the cryptocurrency exchanges. Ambiguity is there. A clarification is yet to come in. Time of deduction, similarly, you go to section 194C contractors, you go to 194J TDS on professional payments, you go to section 194I TDS on rental payments, you come to section 194S for TDS on TDS on payments related to virtual digital assets. Payment or credit, whichever is earlier, is the time of deduction. Let me tell you, there must be payments in kind as well, or there must be payments which are partly in cash or partly in kind. Then how TDS is going to be deducted? Then the obligation or the onus is on the buyer, that the person who is responsible to actually ensure that the tax has been paid if the consideration is wholly in kind. If the consideration is partly in cash, partly in kind, a person responsible should ensure the tax has been paid. This is a gray area, I know, but this is what it is as of now. And the TDS provisions, unlike section 115 BBH, does not apply from 1st April 2022. They apply from 1st of July 2022. There is an exemption as well. There must be happy faces now that, okay, fine, there's a lot of ambiguity in section 194S. Who is responsible? Either, the onus is on the buyer or on, the cryptocurrency exchanges. We do not know. Buyers and sellers do not know each other. Oh God, there is an exemption. But there's an exemption, but the threshold is quite lower. There are two thresholds, INR 10,000 and 50,000. If you are a firm or an LLP, company, any person other than a specified person, the threshold of 10,000 applies to you. That if the consideration is payable by a firm or an LLP or a company and the value of this consideration does not exceed INR 10,000, the firm, LLP company do not have to deduct the TDS there. If you are a specified person, then now who is a specified person? This is a very important part of section 194S. I'm telling you, who is a specified person? An individual or HUF. Do not bring any third person here while looking at a definition of, or while understanding who the specified person is for the purposes of section 194S. It is an individual or an HUF. Again, I'm repeating, only an individual or an HUF, not AOP, no BI, only an individual and HUF whose total sales, gross turnover, receipts do not exceed INR 1 crore in case of business and INR 50 lakhs in case of profession during the financial year immediately preceding the financial year in which you have transferred the virtual digital asset. Or you do not have any other income from business or profession. You don't have any business or profession. Forget about 1 crore limit. Forget about the gross turnover sales. Forget about the 50 lakhs in case of profession. I am a senior citizen. I am an individual, for example. I am a senior citizen. I do not have any income from business or profession. Okay, so the value, I can enjoy the TDS exemption if I'm buying and the consideration is payable does not exceed rupees 50,000. If it exceeds 50,000, no exemption. I have tried to summarize the entire threshold limit for the purposes of exemption from section 194S applicability in the table in front of you. Coming to a very interesting point now on the definition of virtual digital asset. Like I've told you, it is a very wide definition. Who have already, read the entire Breyer text with me of 2 clause 47A. Can your debit card or credit card reward points fall under the definition of virtual digital asset, or airline miles awards, or any such things which you are currently enjoying? Amazon gift card given by your employer. Are they all virtual digital assets? There is a code. For example, take an example of Amazon gift card. There is a code which you scratch on the gift card. You mention that code and then you are entitled to use that gift card for the value. So it's a store of value. Do not come to the conclusion straight away, please. It's a store of value. It's a code. Okay. Generated through cryptographic means or otherwise. Any information or number. It's a number also. It's a number. It's a store of value. You obviously enjoy. If you have got an Amazon gift card of 2,000 rupees, you're definitely going to buy and finish that gift card then and there. So is it a VDA? Coming to debit card and credit card points, you have got, let's say, 2,000 reward points on Cred. Cred is a popular app used by many of us to pay our credit card payments. We get Cred reward points. We buy anything from the Cred club, from the Cred store, utilizing those Cred coins, giving that differential amount. So it's a store of value, digital representation of value. It's a number or a code generated through cryptographic means or otherwise. Seems to fall there, right? Prima facie seems to fall there in VDA definition. Airdrop tokens, they are already VDAs. You have already got that while logging into the VDA ecosystem. If I'm sitting here quietly, nothing is going to drop me. Nothing is going to drop over me, right? Have to be a part of the video ecosystem through my laptop to log in on the portal. Then only the tokens would be airdropped on my profile. So they are clearly VDAs. Debit card and credit card points, credit coins. They could potentially get covered under VDAs, I'm telling you. Amazon gift card potentially can get covered under VDA. They have designed this definition so beautifully in so all-encompassing manner, so in wide way, that even if I take a liberal interpretation, I'm taking a liberal interpretation. There are rules of interpretation. I'm taking a liberal interpretation right now. When it comes to, for example, section 56.2.10, I cannot take a liberal interpretation here. You must be thinking that you are taking a liberal interpretation for section 2 clause 47A. But then you can say that any VDA you gift is itself a gift, is itself taxable in the hands of recipient, section 56.2.10. There I cannot take a liberal view because it is an anti-abuse provision. Section 56.2.10 is an anti-abuse provision, and anti-abuse provisions should be read very strictly. Other important points for the TDS, section 194S. No TAN is mandatory. Like I've told you, the obligation is on the buyer. And is there a TDS regime or is there a TDS section which casts responsibility on the buyer to deduct the TDS and there is no TAN requirement? Yes. We all know that if we buy a property exceeding INR 50 lakh rupees, we have to deduct 1% TDS, right? And that 1% TDS, to deposit that 1% TDS on behalf of seller does not require TAN number at all. Similarly, to pay the TDS under section 194S does not require TAN number. Another relief, or I would say other, relief, or an important kind of a relief or a welcome move from the point of view crypto exchanges, is that section 194O, which came for TDS for on e-commerce operators, it has been clarified in section 194S subsection 8 that if a transaction is subject to TDS under section 194O, section 194S, if the transaction is subject to tax under both these sections, clearly the tax shall be deducted under section 194S only and not 194O. This is the query, this is the practical query which we also received the day these provisions came from our clients, that whether 194O would apply or 194S would apply, why it would apply, why won't it apply, blah, blah, and blah. Clearly, it's a relief, I'm telling, to cryptocurrency exchanges here, that for the cryptocurrency exchanges operating in India, section 194S shall apply and the tax shall be deducted in section 194S if the obligation is cast on you and not the buyer. Presently, there is an ambiguity whether it's on the buyer or on the exchange, because if you cast on either of them, there are practical difficulties. ITR disclosures for FY 21-22, the financial year just got ended, simple. ITR 2, 3 for business income, 2 for capital gains. If you are having a long-term capital asset, long-term capital gains that you've sold a VDA after holding it for 36 months, or if you're sold a sold a VDA within a period of 36 months, it's a short term. Otherwise, it's a long term. Under the CG schedule, you need to report, and in case of a business income, you need to report in part 8 trading account under sale of goods. Net profit would be reported after reducing the permissible expenses. Here you can obviously take the reduction of the expenses, because 115 BBH and a special tax regime is applicable from FY 22 and 23. Other important point here is Schedule FA, which is foreign assets. If you are an individual, like I am a resident and ordinarily resident ROR, there is a requirement to report foreign assets under Schedule FA irrespective of my income. Let me tell you, do not confuse it with Schedule AL. Most of you must be confusing it with Schedule AL, wherein you need to report your assets and liabilities if your net taxable income exceeds INR 50 lakhs. No, it's not that. It's a separate Schedule FA, foreign assets. If you are an ROR, if you hold any foreign assets, any beneficial interest, any signing authority, any immovable property, any equity, foreign equity and debt interest as well, you need to report it in foreign assets. Is it mandatory? It's a popular question which comes in. Is it mandatory to report in foreign assets? For example, I hold VDAs in an exchange, Binance, which is a UK-based exchange. It's a foreign exchange. They have their servers outside. They do not have anything in India apart from one buyer who is an Indian and who is in India. Yes, though there are no clear guidelines by the CBDT, there are no clear instructions by the CBDT so far, but it is advisable to disclose your holdings in virtual digital assets, cryptos, or popularly cryptos or NFTs or any other VDA in your Schedule FA, irrespective of your income level. Even if it is below exemption limit, then also you should disclose it in Schedule FA, in my view. Don't say that, oh, I have only got income for 50,000. Why do it is below the exemption limit? No, you have to disclose it in FA. Otherwise, there are possibilities that you may end up facing some stringent measures in the, under the Black Money Act. It is not under the Income Tax Act, but under the Black Money Act. Again, before saying this, I want to make it amply clear, there are no clear guidelines whether you should disclose them or not. it is my view that it is prudent to disclose them, because Schedule FA is independent of your income level. It is independent of your, again, your income level below 2.5 lakhs or after 2.5 lakhs, your net taxable income is, exceeding 50 lakhs or not. Schedule FA, you should report. It is it's prudent to report here. Fine, but where? I have actually produced a snapshot of the latest ITR forms which were rolled out by the Indian government by on the income tax portal. Schedule FA snapshot is there. If it is a capital asset, it's an asset, no doubt. A1 is a detail of foreign depository accounts held. I don't think it should go over there. Foreign custodial accounts held, no. Foreign equity and debt interest held, clearly no. Details of foreign cash value insurance contract or annuity contract held, no. Details of financial interest in any entity held. Now you should go back to the slide where I deliberated on the types of virtual digital assets. On the basis of functions, we classify them, though there is no standard classification, but on the basis of functions, we classify VDS, payment token, property token, utility token, securities token, and so on and so forth. Details of financial interest, no. Details of any other capital asset, including any beneficial interest, this can go here. Details of accounts in which you have any signing authority, fine. Details of trust created, no. So section D is here. I'll come back to that. Section D, keep that in mind. Section G, it's a residuary section. If you are not able to disclose it from A to F, you disclose it in G. So section D and section G are relevant for you if you are an ROR and if you hold assets on virtual digital assets on foreign exchanges. It is advisable to disclose them. Again, I'm putting, there is no guideline or there is no instruction to disclose, but it is a prudent view to disclose them in your ITR. Coming to the section D, it says country name. If I'm having on Binance UK, zip code, I will be getting it. Nature of asset, virtual digital asset. Ownership, direct beneficial or beneficiary, as the case may be. Date of acquisition, the day you have actually invested there. Total investment at cost, income derived from the asset, nature of income, and simple details. Similarly, lesser amount of details in section G as compared to section D. Simple details to be put here. Please either go for D, either go for G. Prudent view is to, if I have to compare between D and G, proper disclosure would be in D. Again, this is subject to the debate. I'm sorry. Challenges. Still, there are a lot of challenges, like calculation of FMV for the purposes of section 56.2.10. 56.2.10, what it is? It taxes gifts in the hands of recipient. If it taxes gifts in the hands of the recipient, then FMV exceeds 50,000. FMV, how to calculate FMV? There is no rule. Rule 11 UA is there for the unlisted shares. What about FMV and the rule? So there is an ambiguity over here to calculate, or the manner in which the fair market value should be calculated. Crypto to crypto trading. It's in the crypto market. Just a minute. In the crypto market, there is a possibility or a common practice that you exchange your crypto with another crypto. For example, I give you my Bitcoin and you give me your Ethereum. Both are cryptocurrencies. But who is the seller and who is the buyer in this transaction? You have given me your Bitcoin. I have given you my Ethereum, for example, or vice versa. So I am a seller also and I'm a buyer also, and you are a seller also in some way and the buyer also in some way. Then whom to deduct TDS for and how to deduct TDS and on whom the obligation is there. We both are the buyers in the same transaction. We both are the sellers in the same transaction. So the crypto to crypto trading and the TDS nuances associated with it needs to be clarified. Or you can say this slide is actually reflecting the unaddressed or the gray areas where Finance Act 2022 was silent. Valuation issues. Crypto is a highly volatile asset class, or VDA is a highly volatile asset class. It's quite complex. So valuation rules, proper valuation mechanism needs to be put in place in the domestic tax law. Equalization levy. Coming to the Indians transacting on the foreign exchange like Binance in UK. If I am transacting as an Indian user on the foreign exchange, the equalization levy came through Finance Act 2020, wherein the scope was widened to levy 2% on the consideration received by e-commerce operators who supply e-commerce services to a person resident in India or to a non-resident or to any person who buys goods or services through an internet protocol address situated in India. So Indian users transacting on foreign exchanges could be subject to equalization levy. Again, this is not yet clarified, not yet addressed, but equalization levy is an issue there. GST challenges. I think the next clarification which should come in the virtual digital asset space is the GST regime. Income tax regime, they have somewhat, come up with, they have somewhat, cleared the air around that, but the GST regime should be somewhat the next thing for the Indian government. Esops, endless possibilities. I'm telling you, these are new age asset classes. If you give shares in the Esops, you can give cryptos, you can give VDAs as the stock options, or you can give him, I would say any incentive to your employee. What about the taxation of those, arrangements? What about the taxation of those transactions? It's a gray area. Cost of acquisition. It's a very, very important deliberation on cost of acquisition here. Like, there is no deduction allowed other than cost of acquisition. If there is no deduction allowed other than cost of acquisition, then what actually is the cost of acquisition? When in case of mining business, the government has clearly clarified the infrastructure setup, electricity cost won't be deductible for the purposes of arriving at the cost of acquisition. Then what actually is the cost of acquisition? In section 43 in Indian Income Tax Act, at present, there is actual cost for the assets, for, building, for your computer, for the WDV purposes. In the PGBP section 43(1) is the actual cost. Similarly, to my view, a section should be incorporated in the domestic tax laws of India to clarify what actually the cost of acquisition is for the virtual digital assets. Because that's the only benefit we as investors, we as traders get. I'm sorry. Period of holding is another area. If I have received a VDA as a gift, should I consider the period of holding of a previous owner as well or not? Or if yes, in what circumstances? Or if not, then in what circumstances? Cryptocurrency exchanges. There is a need of uniform KYC regulations. It should not be like there is one format for one, internally designed by one exchange and one format internally designed by one exchange. It should not happen like that. There should be a uniform KYC regulation form, which should be same across all the exchanges to maintain the actual transparency in the system concerning the KYC in combating finance terrorism and money laundering transactions. Cost of acquisition in case of crypto to crypto transfer. Again, above I covered crypto to crypto trading. Now it's a crypto to crypto transfer. What is the cost of acquisition? Like, I have sold you my Bitcoin and you have given me your Ethereum. How can you say that this costs certain amount of amount to me, and this you can say this costs certain amount to me? It's a highly volatile market. Prices fluctuate like anything in a matter of seconds, in a flick of seconds. There has to be proper, like I've said, for cost of acquisition, we have section 43 in the domestic tax laws of India. There should be one section which, in my view, should be there for cost of acquisition for virtual digital assets, or a section which should actually tell the manner in which the cost of acquisition should be computed for such virtual digital assets. Another point is the taxation of NRIs. I'm not saying non-residents over here. I'm saying non-resident Indians over here, NRIs. Let me tell you, this forms one of the important chunks, one of the important areas where they actually, the India is becoming the top countries in terms of crypto investments, where non-resident Indians are also investing there in this crypto space. I am a non-resident Indian, for example. I have sold a virtual digital asset on an exchange which is outside India. They have their servers outside India. Should I be liable to tax in India? Section 5(1)(d) clearly says of Indian Income Tax Act 1961 that in case of NRIs or people who are NRs, only India sourced income is taxable. So if they have their servers located outside India, if the entire income or a loss, whatever the transaction outcome is, has happened outside India, in my view, they are not liable to tax, or they should not offer, they don't have to offer to tax this income in India. However, a much needed clarification or a rationalization in section 5, wherein we also check the accrual, the legal right to receive such payment, and etc. facts in the Indian income tax laws should be there, or should come in. Coming to the global developments, there's a lot of things which are happening across the world when we go for key developments around the world. United States of America, crypto exchanges in USA, not cryptocurrency, crypto exchanges falls under the Bank Secrecy Act over there. So for federal income tax purposes, Internal Revenue Service, IRS, classifies cryptocurrencies as property, wherein if I look at Canada, then Canada is the first country to approve Bitcoin exchange trading fund. And they also, from taxation point, consider them as commodities. Some consider as properties. Some countries consider as commodities. India is considering them as, virtual digital assets. UK again considers, its taxability on the basis of a property because it is not a legal tender anywhere. Japan considers cryptocurrency again as a legal property under the Payment Services Act over there. Australia again classifies as a legal property, which makes them subject to capital gains tax, but again not a legal tender. One thing which is common again in the global developments is the attempt to actually combat finance terrorism and the money laundering aspects which gets linked to it as well. What is the way ahead? Like I've told you, India has announced central bank digital currency, its own currency, sovereign backed by RBI, by Indian government. But can it, can it serve the purpose of being decentralized in nature? Because the entire aim or the entire objective of Bitcoin or cryptocurrency or VDA is that they're decentralized in nature. But if a CBDC will come in, it will be a regulated currency by RBI as a counterpart to the Indian currency notes which are there at present. There is no use case. So I won't be, I'm sorry. There is no use case as of now for these CBDCs. But there is a possibility that the decentralized nature will be diluted from that. And if the decentralized nature would be diluted, the entire objective of the virtual digital assets blockchain technology somewhere takes a second seat. So it is an interesting thing, or an interesting proposition announced by the Honorable Finance Minister Nirmala Sitharaman ji, which is, which I think the coming times will tell how this is going to turn out for the Indians, or the investors or traders. However, one thing which is very important to be mentioned over here while concluding my presentation is India is finally opening up to the new age asset class. From 2019 to outrightly banning it, to at least coming up or recognizing it through a taxation regime. Not legally, it is still not legal. It is still not regulated. There is no regulation, no concrete regulation. It's all a draft bill which is there. But at least Indian government has opened up to taxing it, considering it that this is a booming space. This is the new age asset class which is emerging. With this, I'll finally conclude my presentation, and thank you so very much for giving me your precious time, and Chamber of Tax Consultants Study Circle for this wonderful opportunity of presenting myself on the topic, or speaking on the topic of taxation of virtual digital assets, which is very close to my heart. This is about me. I express my gratitude towards all of you for such patient hearing for a couple of hours with me. You can join me, or you can get in touch with me on the email ID which is there. You can join me on my YouTube channel. You can join me on LinkedIn, or you can join me on Instagram as well. So these are the email IDs for your kind perusal.
Yeeshu, can you just see this question? Can you please explain again income tax return slide?
Yeah, sure. So ITR disclosures for FY 21-22, because the special tax regime is applicable from 22-23 PY, AY 23-24. So if you have held those assets as investments, you need to report it under the CG schedule of ITR 2/ITR 3 if you are having, if you have held these assets as your, you as a trader, as a stock in trade. You need to report this under business income after taking the permissible reductions of the expenses. And in case you have held those under the investment, report it under the CG schedule. Short term, long term, as the case may be, period of holding should be 36 months. Be considered for arriving whether a particular asset is a short term capital asset, or a short term capital gain, or a long term capital gain, long term capital asset, as the case may be. And if treated as business income, you need to report in ITR 3 the sale of cryptos in part A, trading account, under the sale of goods, and the net profit should be arrived after reducing the permissible expenses. And if you are an ROR, filing it in the individual capacity, ensure to actually disclose your VDA holdings in the schedule FA also. Ma'am, I have some questions in front of me.
One second, Yeeshu. I think Sujal Mehta wants to
Yeah.
talk. Yeah,
Yeah,
please, Sujal.
thanks. Yeah, thanks. Thanks, Yeeshu, for this clarification. Just a follow-up question on this. If we show as a business income, so once we show that as a business income, I am assuming the we can take the losses also. Since it will be taxable as net profit, so the even the losses would be taken care in this situation if I disclose that as a business income.
Nice question. But we need to see the intent. The underlying intent is that they have disallowed the losses already in the special tax regime, correct? So
Yes.
if the intent was to give the benefit of losses, or there was some comfort of the government to give some respite to the taxpayers who are treating it as stock and trade or investments, then the losses part should have been allowed in the special tax regime as well. However, that does not mean that you should not take into account the losses in whether reporting it as business income or not. You can, prudently you should not.
Okay. Okay. So ideally, a two demat account or something at two accounts would be an ideal scenario to prove.
Yeah, but at the end of the day, you have to aggregate both of them.
Okay. Okay. Thank you. Thank you.
Next question, issue is how to get the details of the purchases.
Details of the purchases on the exchanges, you must have converted your fiat money into the currency in the wallet on the exchange. And then on the orders tab, whenever you log in your account, you have to see the orders. If any exchange you are using on the app based or through your website, on the orders there are definitely dates of it. So the dates on which you have placed an order should be your date of purchase.
The next question is how to prove with the tax department about the cost of acquisition.
It's an interesting thing, because cost of acquisition is nowhere clarified so far. And like I've already told, it is one of the benefits or one of the important deliberations that there should be an important section in the domestic tax law which should clarify, or a notification which should clarify what actually is the cost of acquisition. As of now, cost of acquisition should be your purchase price. That's it. Let's suppose whenever you log in or whenever you become a part of the VDA ecosystem, you pay numerous charges like gas fees, you pay membership fees, you pay conversion fees, you pay you buy an asset for the particular price, you pay that price as well. There is no clarity whether you should consider gas fees, membership fees, conversion fees in the cost of acquisition. There is actually a benefit of doubt which a taxpayer can take. However, cost of acquisition, according to me, should be the amount which is directly attributable to that asset. So if you have paid gas fees or a membership fees to become a part of that VDA ecosystem, that does not form part of your cost of acquisition, because you cannot directly attribute it to that asset price. So the costs which you think are directly or can be directly attributable to the asset should be the cost of acquisition. In case of mining, like mining in India, very negligible amount of people are into mining. So infrastructure and electricity, they are not deductible, clarified already.
Next question is regarding can we claim interest payable on the borrowing made from the relatives against the profit?
I will have to check that. I'll have to check that and get back on it.
I think it will be somewhere same as you responded about the cost of acquisition, because there's no clarity on that.
There is no clear-cut guidelines, but no, some analogies and some harmony needs to be there. So we need to check that basically whether we can do that or not.
Right. And I think there is also a lot of challenge about, just to tell you about this, that the services which are getting paid in the form of cryptos, the invoices of the services or the goods which are being paid in the form of cryptos, there is a lot of challenge about the cost of acquisition, about the taxability, how to value them. It's going to be very difficult in those cases as well.
Absolutely correct. Absolutely correct. So that's why I say it's only if you see, it's only 4 things that have come up: the definition of VDA, the tax rate, and the withholding provisions, and it is taxable in the hands of recipient under 56(2)(10). Only 4 things. It's a gradual process, I believe, and a lot is yet to come. A lot.
Yes, absolutely. So the next question is where the assessee received the notice, but those exchange closed. How the cost can be proved in those cases?
Again, a benefit of doubt can be taken. If an exchange has been closed, you must have been, kept some kind of a documentation, or you must have kept some, there should be some entries in your bank account where you have done your transaction from and all. Take those dates, take those amounts, and do some maths around it, and that is how you should do it in cases where exchanges have been closed and nothing is there on record now.
The next question is, can we, no, just sorry. In case of TDS, 194S will override other sections. So one has to deduct 1% instead of 10% under 194J.
Can you please repeat this question?
Sorry?
Can you please repeat this question, ma'am?
Yes, sure. It's saying that in case of TDS under 194S, will it override the other sections? So one has to deduct 1% instead of 10% under 194J.
No. It is a non-obstante clause attached to it. 194S shall apply, not 194J.
Yes. The next is department has only information based on searches conducted that the assessee has earned on account of sale, but about the purchase, since the exchange closed, how to prove the cost? I think you already answered about it.
Right.
And then the next is, can bank statement suffice?
They form a part of your supporting documents. Whether they can suffice or not, that's a call of an assessing officer, but they form a part of your documentation. They form a part of as a response to the questionnaire if you get that.
And I think the last question is about the GST implication on VDA. I'm not sure whether that's the right thing to ask at this
It is the next thing which is expected to come out, anytime soon. I think the next clarity which the government should come up, or the next development which should take place in the VDA system is on GST only.
Yes. So thank you so much, Yeeshu. It was really wonderful presentation and wonderful lecture.